In this video, guys, we're going to look at common excuses that traders use to avoid taking a loss. Stay tuned. Hey traders, warm welcome to you. Thank you for joining me. All right, so maybe you're one of these traders who is in a phase where you're not very disciplined with your losers. They come to your stop. You find a reason to either move the stop, cancel the stop, or just avoid taking the loss. And do you know what, guys? That is something you've got to get out of the habit of doing, because you might get away with it a few times, but if you don't have that disciplined muscle to be able to take the loss as and when it's required, regardless of whether it's the right thing to do or not in hindsight at the time, you're never going to be able to move forward because you never trust yourself, you never trust your judgment, you never trust your analysis, you're always trying to second guess yourself, and then you can never win. When you're right, you end up doing the wrong thing later and it's just a mess. So the moral of this, when we get to these kind of things that you might go, oh yeah, that's me, is to really work on your discipline and trying to become much more focused on just cutting those losers and moving on, just forgetting about it, moving on. So first thing you might tell yourself is, I'll just give it some, by the way, guys, I have said all of these to myself throughout my trading career. At the beginning of my career specifically, I've definitely said absolutely all of those to myself as a justification for not closing a loser. So I've been there, I've done that, I've gone through the pain of it, I recognize that it's not in my best interest. Fortunately, that's decades ago, and if I carried on doing that now, I know that it would just devastate my trading account. You'll never get the traction that I've got. So you will feel uncomfortable doing it, but it's got to be done. Right, let's go for it. Just give it some more room. That is basically saying, hey, I'll just give it some more room. In other words, you know what? It feels like it's going to turn. I've got a feeling it's going to turn. I don't want to cut it yet. It's pausing a bit. Maybe it's grounding down. It's just holding near. I'll just cancel my stop because it's very close. I don't want to get triggered. And you know what it's like. You have the market go down, it just sits there, and it's really close. I don't want to get triggered on this. It looks like it wants to turn. So you pull the stop. Next thing is a big leg lower, and you're like, and then you're stuck. You're a deer in headlights. I didn't want that to happen. Now what do I do? Well, I can't close it now. And then you're in the real danger zone, guys. You know this before. You've probably been there before. You're in a real dangerous position because you've moved that stop. The prices are lows. You've kidded yourself that you can't close it. Now the loss is more than you really wanted. So now what are you going to do? You don't want to cut it because you're really lower than it was before. It really feels like it's going to reverse. And that pain is quite bad, that loser. And ultimately what will happen is it will go lower and lower and lower, and it'll go to a point where you're looking at P&L and you cannot take it anymore, and boom, they say you're chucking up that position right at the low print and you're just trading for emotion, and it's the worst thing. Anyway, I'm digressing, but I'm sure you've been there. If you haven't, watch out for it if you're doing some of these things. Number two, the market is pushing this lower. I'll wait. So in other words, let's say you're in a stock, or let's say you're in something that has some correlated instrument. You're like, well, the market is a bit weak. This stock's okay. It's pretty bullish, this stock. The market's pushing it lower. Well, it's irrelevant. The price is the price. It doesn't matter whether Donald Trump's pushing it lower. Doesn't matter whether the interest rates are pushing it lower. Doesn't matter whether hedge funds selling is pushing it lower. Doesn't matter whether what the situation is. It's going lower, and it can go a lot lower if you're long, of course. So just be aware that making excuses isn't going to help you in one way or the other. Number three is it's gone way too far. I'll hold for now. Classical one, this, especially on those big trend days. Huge trend day on the market, whatever your instrument you're trading. It's gone too far. I'll fade this. I'll fade this a little bit further. It's just creeping. It's gone really far. A big move. This. I can't see it going any further than this. This is a real big move. Creeping. I don't want to. No point coming out now and stopping. It's gone way too far. And you convince yourself that that's the right thing to do, and it's not, because at the end of the day, the markets can go as far and as wide as they want. There's no restrictions apart from the circuit breakers, and you can be caught out on some real monster trend days, the upside or downside. It doesn't have to be an unusual event or a driven event like a news event. It can just be come out of nowhere, guys. We see these trend days, real solid trend days, and if you're on the wrong end of them, you get completely hammered. So watch out for that gone too far mentality. It never serves you. The fourth thing is it will turn soon. No need to cut yet. So you're convincing yourself, hey, it's definitely going to turn soon. It feels like it wants to turn. Look, and you start then looking at the chart and saying, well, there's some support there now, you know, that looks like a little bit of a double bottom, and you start convincing yourself of all the patterns that you know. You start chucking up indicators that you'd never chuck on before. Oversold, look at it, it's oversold. It's going to turn now. There's no many reasons to hold it. You can always find a reason, guys, to justify why you should hold something, but the main point is if it's going against your trading plan, if it's going against the reason you said to take the trade, then you're in a really slippery slope, and it's tricky to get out of it. The final one, which many of us have probably been here, is I don't want to be the idiot who sells at lows. I'll hold. You may have been in that situation, obviously buying at highs, same kind of thing. You've been in a trade, you've tried to catch a reversal, it's not worked. You've thought, I don't want to be, that stop's right. I'll pull the stop, and now it's too, I don't want to sell at lows because it really feels like it's going to turn. It's got a big move. If I sell at lows, not only will I be the person who sold at lows, I got in, I've done all the hard work, you know, and I'm going to miss out on a big move. So I'm going to get a double whammy of the disappointment of missing out on the big move on the bounce, and I'm going to be the clown who sold at the lows. And you're kind of thinking this to yourself when you're talking about this. Guys, the market can go lower and lower and lower and lower. And one thing that may help you that I learned to accept many years ago is, as an active trader, I will sell at lows and I will buy at highs plenty of times. Just like I will buy at lows and sell at highs. Being an active trader means you are going to be on the wrong side of the market from time to time, and you're gonna be the guy who sells the low print right at the low, who gets stopped out on the low tick from time to time, who gets stopped out on the high tick from time to time. But you're also gonna be the guy who happens to buy the low from time to time and gets a good solid move. So once you accept the fact that that is inevitable, and you are going to be on the wrong end of stuff occasionally, and sometimes right at the extreme, it becomes easier to accept the fact, and that doesn't even come to me like, well, I don't class myself as an idiot, I class myself as an active trader now. And yes, if I get things wrong, I have to be disciplined enough to cut the trade. And if that happens to be at the low print, then it happens to be at the low print. Fortunately, you know you're confident, you have your confidence and know that, hey, it's not something that happens regularly to me, but it's going to happen from time to time. You know, sometimes a little bit of luck comes in that doesn't go your way. Sometimes it might stop a tick away from your stop and then rip back up and get your full target. This is what happens with being an active trader, guys. All these different permutations will be there. The key takeaway, guys, we've got 5 things here, but the key thing is to just not use any excuses. Have your trading plan, decide what your trading trigger is, decide where you're going to enter the trade, where you're going to exit the trade, and then sticking to that. No matter what you think in the heat of the moment, no matter what little voice in your head is telling you that you should take the stop away, leave the trade, ignore that and just stick to the rules. You can always adjust and amend your strategy afterwards, but if you don't stick to it, you've got nothing to work from. You can't trust a word you say to yourself about your discipline. You can't trust your analysis. You're saying to yourself in the heat of the moment that you know better in the heat of the moment, rather than someone like yourself doing the due diligence, doing the prep in the cold light of day when you're at full focus, and that doesn't do you any good. So whenever you get into that situation, guys, be very disciplined, take the stop, and if you end up taking multiple stops in a row, then you review afterwards and go, hey, am I doing something wrong? Is my trade positioning wrong? I seem to be getting stopped out an awful lot. I seem to be doing something wrong. Then you dig down and go, is it the stop distance? Is it the trade entry? Is it this? Is it that? And you can find a fix, and then you can iterate your plan and move on. If you're just randomly pulling stops out, if you're just holding stuff, not only are you not able to improve your trading plan, but the worst case scenario is you just get wiped out, because it puts you, as we said at the beginning, don't repeat ourselves, it puts you in that deer in headlights scenario of, I've moved my stop, now what? And I've got to actively take myself out of the market, which when you're feeling the pressure, when you're under a big heavy loss, is a hard, challenging thing to do. Anyway, guys, whatever you're doing, take care, keep the risk managed. If you haven't checked out our channel sponsors, a link to them in the description below. Feedback from it, which is much appreciated. All your emails, or your comments. It really is. It's great to hear that you're getting such value out of it. But regardless of that, if you're trading, don't move your stop. See you next one. Bye bye.